It's the first weekend in the second half of the year, and this is Capital Markets. Thank you for joining us. I'm Temple Ashaju. The financial market performance in the first half of the year remained volatile in reaction to the status quo of fiscal and monetary policies and the lingering challenges in the economy. The equities market's benchmark index hit a 3-year low at the beginning of the year and remained subdued for most parts of the first half. However, the market settled at 3.3% year-to-date following the flexible exchange rate policy framework introduced by the Nigerian Central Bank. At the fixed income markets, average yield on FGN bonds rose from 9.8% in January and ended the 6 months at 14% amid worsening macroeconomic fundamentals. On capital markets this evening, the state of the market will lead us into discussions with one of the major operators in the Nigerian financial market. But before that session, here are some news making the rounds in the sector.
Some experts in the country have been looking at the implications of Britain's exit from the European Union. According to analysts, Brexit is likely to hit Nigerian banks along credit line, as well as the nation's import and export directions. The experts who believe that another global recession looms have advised that it's important not to panic.
How much of British imports do we receive into Nigeria? And how much of Nigerian exports go to Britain? And I pick out very simple statistics to indicate that. Official, of course, from the Central Bank of Nigeria's report. 5% of our imports is from UK. Then 5.9% of our crude oil export in UK. So you have 5.5 imports, 5.9 exports. So how does this play out for us? This is something we also need to consider. If Nigerian banks enjoy credit lines in UK, by the time they begin to struggle to survive, where will they have the muscle and the energy and resources to support financial institutions in other jurisdictions? So that's a big issue for us to consider.
We want to begin to say that the political fallout, as we've already seen Cameron's tendering of the resignation, going to be much more than that. You would definitely agree with me that the euro era has not got out of the global financial crisis. And amongst the euro era economies, the EU economies, Britain was one shining star even through the period of the crisis. And with this crisis hitting Britain and then hitting the rest of the EU, so the recession is not just going to be the UK's own recession, it's also going to be an EU recession. And then we're going to have only a United States that is a shining star on the planet, which means the global economy is going to go back into recession. There are a whole lot of issues surrounding the Brexit.
Things have actually fundamentally shifted. The reactions you saw in the market, it's because the market, for the first time, did not price in the possibility of a Brexit. Markets don't normally tolerate uncertainty. In this one case, everybody went on the 80% only because it does not follow the principles we were all taught, rational decision making. And it is that conflict that you see still existing today and which will continue, because you cannot therefore understand how is it possible. And so what really are we talking about in terms of this? Let us put it in context. What does United Kingdom represent? What does Britain actually represent? The UK is the major international financial center. Some numbers will help. In terms of cross-border bank lending, UK holds 17% of the international market share. In terms of hedge fund assets, UK holds 18% of the market share, compared to 1% of France. In terms of wholesale financial services, UK holds about 20% majority of the whole business. It dominates the false foreign currency market deal. So when you talk about UK, Dr. Adedepe was talking about GDP, I will reduce it to the financial market. That is your financial hub.
Listed energy trading company Owando, Nigeria, has announced a 10% fall in turnover to 381.7 billion naira for the 2015 financial year. The report released today shows gross profit down 7%, while loss after tax slowed to 50 billion naira in 2015. From the operational side, Owando's total oil production increased 118% to 19.9 million barrels in the year under review. Owando Energy Resources reports a cash inflow of $234 million in 2015 by resetting its crude oil hedging average of $95.35 per barrel to a new price of $65. The Indigenous Energy Group also made public its first quarter's earnings for 2016. Turnover for the 3 months contracted 34% against an impressive appreciation of 120% in profit after tax, which came in at 4.1 billion naira. Leading flour milling company Honeywell has posted a revenue of 50.88 billion naira as turnover for the first quarter of the year. The industrial giant saw a 2.8 billion naira profit before tax, as well as a 3 billion naira profit after tax. Honeywell maintains a capitalization of 11.57 billion naira, with a share capital of 3.96 billion naira for the period under review. The Nigerian Stock Exchange has announced the results of the biennial review of its sectoral indices. According to the new design, the NSE 30 and the Industrial Index are the only sectors affected. While UAC Nigeria replaces GlaxoSmithKline on the NSE 30 index, DN Meyer takes the place of Avon Crown on the Industrial Index. According to the Stock Exchange, the new composition becomes effective on July the 1st. All is now set for the implementation of the draft policy framework on dedicated e-payment and card crime unit of the Nigerian police. The Central Bank's Director of Banking and Payment System, Mr. Dipo Fatokun, made this known at this year's second meeting of the Electronic Fraud Forum in Lagos. According to Mr. Fatokun, the proposed unit, which has now earned the approval of the Central Bank, will be situated in Lagos.
Of the Committee of Governors of the Central Bank to do the following. 1. The approval covers the operational framework for the unit. 2. Provision of temporary office accommodation for the unit in a location in Lagos for an initial period of 2 years. 3. That the framework should be presented to the Bankers Committee to facilitate the recruitment of industry secondees, work study of similar units, and takeoff of funding for the unit. At the meeting in March, we informed you that the Nigerian police have actually seconded 3 officers that will man this unit. So they will be working with industry secondees. So when the unit finally takes off, we will be making requests to the banks, the switches, and other stakeholders in the Nigeria Electronic Fraud Forum to second their staff that will work with this special unit. We intend to make our presentation to the Bankers Committee on this at the next Bankers Committee meeting. The forum also placed a courtesy call on the Executive Vice Chairman of the Nigeria Communication Commissions, Professor Dambata, on areas of collaboration in reducing vulnerabilities in the mobile space and increased participation at the forum. A guideline on SWIM swap has been drafted by the Nigerian Communication Commission and is currently being jointly reviewed by the Central Bank and the Commission. We are all aware of the AFOC that is currently being caused by this exercise, that is SWIM swap. The NCC has also increased its participation in this forum to include their new media, legal and technical standard departments.